Hello, this is Michael Devlin with the Michael Devlin Group, and we have a quick update on what's going on in the real estate market in the San Jose metropolitan area, Silicon Valley, Santa Clara County. The numbers for August 2020 are in. I've had a chance to look at them. There's some amazing things happening in the markets, things that are different that I haven't seen, and I've been doing this for a long time. Let's take a look at what's going on right now. Let's start with home prices. We're looking at Santa Clara County for August 2020. First of all, we're going to look at the median sales price in August 2020 compared to August of 2019 combined. And that means we're going to include single family homes, we're going to include condominiums, and we're going to include townhomes. And the answer is the median price year over year went up 15%, or on average about $165,000. But what's interesting is when we drill down and look at the difference between the different property types. For example, single family homes had a substantial increase in their median price, 18% year over year. Look at the number for the median price of a single family home in 2020, $1,400,000. That is the highest I've seen. It's sort of a peak for the median price. But then townhome prices have been sort of flat. Condominiums gone up a little bit, but nothing like single family homes. If we're looking at the average sales price, the difference is even more stark. Medium, of course, is the one that's in the middle with an equal number above and an equal number below. Average is, well, the average, and it can be significantly different from the median because you might have some very expensive home selling, which throws off the average more than it does the median. Notice, though, the average price of a single family home was nearly $1.7 million in August of 2020. That's a 17% increase in the average year over year. Now, it breaks down by city. If we're looking at where have been the greatest increases in median price, you can see Monte Sereno is at the top, right? The high end of market is very robust right now, a 42% increase in the median price. Sunnyvale, Mountain View, Los Gatos. Notice San Martin and Morgan Hill are coming in there with a 16% increase year over year in the median price. Santa Clara, San Jose, Los Altos, those are the cities in Santa Clara County that experienced a 10% or greater increase in the median price in just 1 year. The dollar volume of sales looks at the total dollar volume of all the properties that are sold. If we took all of the prices and added them all up, how much volume has gone up or down, you can see there has been a substantial increase in the dollar volume of the properties being sold, a 20% increase year over year. And again, it breaks down by building type. Notice that the substantial increase in dollar volume is in the single family homes, a 22% increase. The actual dollar volume for townhomes and condominiums has dropped year over year, but it's being buoyed up because of the strong single family home market. If we're looking at the list to sales price ratio, we're asking, okay, the seller listed it for $1 million. Did they get $1 million? Did they get more than $1 million? Did they get less than $1 million? For single family homes, the answer is they generally got more than what they were listing it for. If you're looking at condos and townhomes, it's not bad, 99%, but still not as strong as the single family homes. And this list to sales price ratio again breaks down by city, where the cities where we're seeing the strongest growth in median price, also we'll see they're the strongest number of sales, are the ones with the highest list to sales price ratio. In Saratoga, on average, people were getting 4% more than what they were asking when they sold their home. 3% for Santa Clara, San Martin, and Morgan Hill. Also Campbell and Los Altos and San Jose and Gilroy each got 2% over. Now, there's more behind these numbers. The average is just an average. And although the average is slightly above 100%, there were 200 sellers last month that got more than $100,000 over list price. 370 got over $50,000 over the list price. The winner of who got the most dollars over what they were asking was 651,000. Right, over what they were asking, and the highest percentage last month over asking was 34%. On the other end of the scale, somebody sold a house last month and got 807,000 less than what they were asking for, and someone else sold a property last month who got 28% less than what they were asking for. Now the average might average out, but there are a lot of people getting a lot more and a lot of people getting a lot less. Your mileage may vary, is what I'm saying. The price per square foot, just because the median is moving up and down or the average is moving up and down, it doesn't necessarily mean that your house is moving up and down in terms of its value. The median, which is the middle, is just the middle. So if there's more sales above that middle point, then the median moves up. Also, that would move up the average. But dollars per square foot is another way to control, because we're comparing more of apples to apples than properties that are different in size and all of that. You'll notice that for single family homes, if you're wondering what your house is worth, it's on average, people got $850, which is 10 per square foot, which is 10% higher in August of 2020 than what they got in August of 2019. Let's look at home sales. Again, we're looking at Santa Clara County, condominiums, townhomes, single-family homes, August 2020, comparing it to previous years. Now, you'll see that the combined sales are up 3%. Sales are up in Santa Clara County. But notice they're down for condos and townhomes, but up substantially for single-family homes. It's the single-family home market that's driving the housing market in Santa Clara County. That's where the sales are up. That's where prices are up. That's where inventory is significantly down. You can see the trend from this year and where the COVID-19 took over. We started off strong, more sales in January and February than previous year. March is when it started to take a hit. April and May dropped significantly. In May, we were at 50% under what we had in 2019, picking up in June, exceeding in July. In July, it exceeded July of 2019, and in August, we're still ahead of 2019. So what's sort of happening is the normal spring, early summer sales market has been pushed because of COVID-19 to later in the year, but the demand obviously is still there. Again, it breaks down by city. Look at the cities that have had the greatest increase in number of sales. Los Gatos, Monte Sereno. Again, this is speaking to the strength of the high-end market in Santa Clara County. Santa Clara, the city, Morgan Hill, Gilroy, San Martin, 28% increase in sales year over year. Increase in Willow Glen in sales, increase in Sunnyvale. So these are the areas, the marketing areas in Santa Clara County where there's been a greater than 10% increase in sales year over year. Look at how it breaks down by price range. If we're looking at homes, these are, by the way, in 100 and 1,000 increments, so it's 200 to 400,000. 1.2 million to 1.4 million is the beginning of the increase in sales. Notice, look at that was 22% year over year increase in sales in that price range. 1.4 to 1.6, 33%, 38% in the 1.6 to 1.8. Look at the increase in sales in the high-end market in Santa Clara County. Then compare that to what's been happening in the lower end of the market. And obviously those sales are down a lot. It isn't necessarily because nobody wants to buy them. It's because there aren't any for sale for people to buy, not enough. That's why sales are down. Again, it breaks down by city. Los Altos has the greatest increase in sales. Los Gatos, Morgan Hill, Santa Clara, Gilroy, Palo Alto, Sunnyvale. Those are the cities that are showing a 10% or greater increase in sales. But you can see San Jose sales are down. Mountain View, they're down. Milpitas, they're down. It's not, everybody isn't having the same recovery. Home inventory is one of the driving factors, not only in the number of sales, but also in pricing. Active listings are down. They started down in January and February, even before the COVID-19, the number of listings that were active in our market had dropped. That's partly because there were fewer new listings, but also because the listings were selling very quickly. You can see how it normally would peak by May and June, whereas we've sort of flattened out. Right now, the number of active listings are down significantly year over year. And it breaks down by building type. The number of active listings for single-family homes are down 38%. 5% for condominiums and townhomes. This is where the lack of inventory is showing up. Contingent and pending. This means that the property's for sale, a buyer has made an offer, the offer has been accepted. Contingent means there's still contingencies. Pending means the contingency for inspection and appraisal and financing have all been removed and we're good to go to close. So those pending sales are more of an accurate indication of what's going on right now in the market, because the closed sales are sort of a lag indicator. Notice that the number of pending sales is up. Now remember, active listings are down, but pending sales are up 30% for single family homes. And if you look at the chart, you can see in January and February, they were up above January and February of 2019, the pending sales. COVID hits in March, April, May it goes down, but look, in June and July and August, the number of pending sales in Santa Clara County exceeds in 2020 what it was in 2019 for August. New listings, well, they're going up. This is one of the positive indicators. For single family homes, year over year, the number of new listings went up 20%. And you can see the trend all through the year, where we started higher for 2019. It was strong with the new listings, went down during the COVID-19 and is starting to pick up again. I see that partly because I see that people are getting more used to the shelter in place. Things are loosening up a bit. They're being more comfortable with selling homes. More homes are coming on the market. And finally, months of inventory. But a month of inventory is a metric that asks the question, if we were to stop listing homes, and so how long would it take us to sell our current inventory? So we look at the current inventory today, we look at the number of sales we've had in the last 30 days, and we divide. How many months of inventory do we have? Right now, for single family homes, the answer is 1 month of inventory. When does a real estate market start to move from being a seller's market to a normal market? It's about 4 months of inventory. When does it start to become a buyer's market? About 6 months of inventory. We have 1 month of inventory. This is a very strong seller's market at this time. 1 month of inventory. If we look at expired listings, these are the people who did not sell their home. Notice there's very few of them, and for single family homes, there's less in August of 2020 than there were in 2019. What that means is that most people are eventually able to sell their homes. Their listings are not expiring. How long does it take to sell a house? Well, the median day on market for a single family home in August of 2020 was 9 days. That's how long on the median was to sell a home in August. It took eternity to sell condominiums, 2 weeks, right? 2 weeks, right? Now, I remember markets when it was 45 days was the median days to sell a home, 30 days. This is evidence of a seller's market. And you can see that the days on market is down significantly year over year. Significantly, 14, 12, 9, those are really low days on market. Average is a little bit higher, and that's because some homes have been on the market hundreds of days, and that throws the average off, but still the average number of days to sell a single family home was 19, right? Median was 9, average was 19 for those sales that took place in 2020. Well, that's what I look like again. If you're interested in finding out what's going to happen in the market in the future, like the video, subscribe to my channel, hit the bell for notifications. I'm going to be doing videos on what's happening in the future, how things are shaping. Where do we expect there to be a crash? Do we expect there to be more inventory? Are prices going to keep rising? What's going to happen to interest rate? If you're curious, like the video, subscribe to the channel, hit the bell, you'll be notified the next time I have a video.